Good afternoon, traders. This is Tony D from easyMarkets in Sydney Dealing Room. Update on the price action on Friday. So what we talked about on Friday during the last update was that the US dollar was getting very strong, and the market was looking at some US dollar index, US dollar. US Treasury yields rising up, and this was leading to US dollar strength. And this is what continued on Friday night. You saw more US dollar strength. Aussie dollar broke below 77. Went all the way down towards 76.50 before stabilizing a little bit more subdued today. A small little bounce that we're getting here in the Asian session, nothing crazy. I have to get back above 77 to alleviate the short-term downward pressure. You can see the dollar index though here is building up for another test of this 90 level, and we'll see how we go. If we can get past that previous high, which was around 90.30, then traders are going to start looking at this and saying, well, I mean, it's struggling on the downside and we've got room here to move towards the top side, target maybe 91.50 to begin with. Now, while that might seem like a small move, that would translate to dollar yen 110, euro much closer to 120, and the pound down probably towards 138. Now the pound can outperform, it has been outperforming in the past, but you wouldn't bet on it rallying. If anything, it might stay the same in a US dollar strength environment and then just rally against the other crosses. But the pound's got a little bit of an issue in that it's no longer a certainty that they're going to raise rates in May. Carney's speech last week after the poor CPI numbers did open door to the Bank of England being a little bit more cautious, a little bit more patient in waiting to see if the inflation settles down by itself. Now they can raise, just one or two more times this year with inflation remaining where it is, but it becomes a bit more of a when, and each meeting that you go into, generally central banks these days like to make it pretty clear they're going to raise or not, and they definitely haven't done that. So we're looking at a bit more of a 50-50 scenario than previously. And if another speaker comes out and says, oh, they're patient, then it might turn into not this one, but next one sort of feel, and that could just add to that selling pressure as well. Or take out the reason to buy. Take out the reason for it not to go down when the US dollar is strong. But if you're looking at, say, pairs like the Euro Pound or the Pound Swiss, the recent dip from last week could just provide a better opportunity to buy the pound, given that it's still very, very cheap in the long scheme of things, and Brexit seems to be moving along at a brisk, pace towards the new transition deal. And there's little headlines there at the moment that are causing negativity. Now, the Aussie dollar, if it was to break 76.50, does have a fair bit of room here to move down to that 75 level that it tested in December. The reason for the Aussie to underperform, look, it's there is a fear that just generally the global economy led by the US would slow down if interest rates keep on getting higher. Seems to be an accelerated version of that. Maybe it was positioning that the market was so long on the Aussie. But it was pretty big moves for the Aussie. If you're looking at the Aussie speed at which it drops, that was about as fast as it has been doing for the last couple of years. Not as much as it used to, but still it's quite big black candles here you can see on the daily. And if it is going to go lower, it usually takes its time. So we'll see it probably slow down now that it's done its big initial move. And the grind lower might take a few weeks, and it does require the US dollar to remain strong. As soon as that US dollar doesn't takes its foot off the accelerator, then the Aussie dollar is one of the first to bounce after stabilization. It has a default grinding higher sort of feel about it. Alright, traders. Look, we'll be back tomorrow. It's a light data week because it is the last week of the month, but there's still a couple of big announcements, the biggest one being Australian CPI, and there's also US first reading of the Q1 GDP. Now that's going to get a lot of attention from traders because we want to see how those tax cuts helped or hurt sentiment and numbers in the economy. You won't see the full effect of the tax cuts just yet, but you might see the effect of the optimism come through in terms of spending already.